Yeah, what's been interesting is that we've seen these big moves in the market, but not necessarily kind of manifest themselves in the charts in the way that we thought they would. I will tell you from last week, the longs of the US dollar has actually decreased. I mean, from the Tuesday to Tuesday, they decreased down negative 58% on the longs, which is amazing. You know, it's something that I don't think we expected, or what I wouldn't have expected to see, considering the confidence right now that seemed to be passing into what the charts were telling us with the US dollar. But the longs actually decreased their positions by 58%, and only and the shorts also increased by 9%. So that might be quite significant. Here we go. Yeah, so you can see that. You can see that there.
Sorry, Aston, where are we on?
So if you go to the dollar, coming down to the dollar, just down a little bit further. There we go. US dollar index. Yeah, and if you look at the look at last week's actual positions on the actual numbers of the data. So you know we can start with the 68%, 55%. But as we go along, you see that negative 58%. Now that is the accumulation of the long positions. So the longs have actually decreased their positions by 58%, and they've increased their shorts by 9%. So if we were going on that particular information alone, that wouldn't be particularly bullish US dollar. Now, it might be because the timing's not there. It might be, from the fact that the Fed have come out and stated something without actually without actually doing anything. What they decided to do is change the dot plot, and that's another 2 years away potentially. So where we saw that reaction with the dollar, if you were to look at that, that would suggest that the reaction that we had is a knee-jerk reaction. Now, I'd like to see this unfold a little further. I'd like to see whether, you know, what are we getting this point right now where the Fed come out and say something, there's a knee-jerk reaction, and then people go, but hold on a minute, that's still another 2 years away. We can squeeze this for a little bit longer. And then we start to resume what looks to be the most sensible course the most sensible direction of travel, because what the ECB have come out and said, and what the Bank of England have come out and said, are quite a way off from what the Fed have said. You know, the Fed and Jerome Powell was I think surprisingly hawkish, even when he started to talk about jobs data, which hasn't really come in line with what they were initially discussing. What they were initially discussing was they need the jobs data to pick up so they can feel comfortable with raising the interest rates. But in the most recent speech, there was a slightly different tone. You know, the tone that I was reading was the jobs data is going to catch up. You know, we don't need to worry about the jobs data anymore. It's going to catch up. You know, now we're in this phase where the inflation transitory rhetoric is being diluted. Maybe it's not so transitory. You know, that's kind of what the picture I got. Maybe we're not in. Maybe some of it's transitory, but maybe there's something a little bit bigger and a little bit deeper going on. The jobs data will catch up. The jobs market looks good. We're starting to see businesses open up, so that data is logically going to be picking up. So we can change the course of direction. The Bank of England didn't say the same thing. You know, the Bank of England effectively said we're still where we were. The ECB didn't say the same thing. They effectively said we're still where we were. So the Fed's a lot more hawkish. If you just go a little bit more positive and everybody else kind of like maybe even a little bit more negative, that creates more of a margin between the two stances. So that would suggest to me long dollar. The COT data, when we're looking at this, is not suggesting long dollar from what we saw with the positions last week. However, that particular column really tells us what they were doing last week. So what we need to be looking for is what's the week that changes? You know, when does that start to kind of turn around again? Because from what I'm assuming with this is that we hit a level of resistance, we're going to come back again. But I personally think that the dollar long is now. I think now we've got a green light to go. So, you know, it could be next week that we see that COT data then start to turn again in the favour of the bulls, or it could be a few weeks down the road. Because as I say, you know, we've got 2 years for this to play out. It might be a few data points that we're looking at, but I think the suggestion now is that a support level and a buy signal on the dollar, I think, is well worth trying to trade into.
Cheers, Ash. So give us the summary again. Looking to buy dollar, buy US dollar?
Yes. So we're looking to buy the US dollar, but the COT data is suggesting that the timing is still early for that to happen. So what we've seen is a knee-jerk reaction. You know, a lot of those commercials kind of come out of their long positions. And a lot of those commercials actually increase some of the short positions as well. So that's a suggestion that that it might be a little bit early. And the reason that might have happened, the reason that the long positions came out so aggressively, may be because they were maybe there was a big accumulation going on down at 90, and maybe that there was quite a lot of profit taking when it hit the top of the resistance level, and now they're just waiting for it to come back and get back in. It's difficult to know what they're doing, but it's definitely saying to us that going long dollar is a shade early, if not very early. But it's definitely telling us it's a bit early. But my fundamental kind of bias now would be look for those signals to go long. The COT data saying hold fire just for right now. It's not ready yet.
Yep. So just looking at a chart of dollar CAD, mate, to have a bit of a look at what the dollar's doing. Certainly looks like not a bad idea to be getting, you know, the latest move when this is long dollar with a retracement, right?
Yeah, exactly. That's certainly what the fundamental hint would be. You know, there's nothing really substantial that we can say this is why. All I can say really is that the tone has changed from the Fed, and when the tone changes, that's when we start to go, well, we are ultimately speculators. You know, we're not people that go on concrete evidence, because by the time the concrete evidence is out, the move's done. So this is where the speculation aspect of trading comes into play. You know, can we start speculating in this area that we should be building a position with the dollar? And I think it's absolutely fine to kind of go in light with quite wide stops, just to kind of give it a little bit of breathing space, because the COT data is suggesting it's not going to explode in the next week anyway.
Cheers, mate. And for more updates on the cotton seasonal stuff, there's the strategy bias group where you cover the stuff and a lot more detail across all the currency pairs, right?
That's right. Yeah, that's right.
Cheers, mate. Thank you very much for that.